Welcome back to Talk Tickers. You know we love to get our hands dirty with earnings calls, and this one's a real doozy. We're diving deep into Marvell Technologies' Q3 report, and let me tell you, it's a wild ride.
Yeah, you hit the nail on the head there. What's so interesting about Marvell is that they've really gone through a massive transformation. They've strategically shifted their focus, and honestly, the results, they speak for themselves.
So let's break this down, Marvell.
Okay.
You know, the company famous for semiconductors, they just crushed everyone's expectations. We're talking 19% sequential revenue growth, a ridiculous 98% year-over-year surge in their data center business.
And this isn't some, flash-in-the-pan growth spurt. This is all about their AI-focused custom silicon. It's what landed them that massive multi-year deal with Amazon Web Services. We're talking custom AI chips, optical tech, the whole 9 yards. This is a really, really big deal.
And here's where things get even more interesting, Marvell. They're basically saying, hey, world, we're an AI-first company now. I mean, their data center revenue, it's a whopping 73% of their total revenue, and it's only going up.
That's right. They're going toe-to-toe with the biggest names in custom silicon, and they're holding their own. They're not just surviving, they're thriving. Their Q3 revenue was $1.516 billion, which smashed their guidance and their non-GAAP earnings per share, up a crazy 43%. This is not just luck. This is a company that knows how to execute.
So someone listening to this might be thinking, okay, great for Marvell, but what's in it for me? Well, think about this. As AI gets more and more woven into our lives, the companies providing the tech behind it, companies like Marvell, are going to be in the driver's seat.
And don't underestimate the complexity of what they're doing. We're talking chips with over 100 billion transistors on a single chip, and Marvell is ramping up production like it's nothing. That's not easy. That's a big deal in an industry that's been struggling with supply chain issues for years.
Now let's zoom in on this AWS deal for a sec.
Yeah.
This isn't just a quick deal. It's a long-term partnership. We're talking multi-generational. Marvell is going to be supplying custom chips for AWS's future tech for years to come. That's a pretty big vote of confidence, wouldn't you say?
It's a huge vote of confidence. It shows that AWS, a leader in cloud computing, trusts Marvell to keep innovating and delivering. And let's not forget, AWS's decisions, they often set the tone for the entire industry. So yeah, this is a really big deal.
We've talked a lot about custom silicon driving this data center boom for Marvell, but what else is fueling this growth? What else is going on behind the scenes?
Well, for one, their electro-optics products are in high demand, too. These products are essential for moving massive amounts of data within data centers at lightning speed, which is exactly what AI needs. We're talking 800 gig and 1.6 terabit pounds. This is cutting-edge stuff.
And it sounds like they're not slowing down anytime soon. They're already working on the next generation of even faster interconnects. They're staying ahead of the curve, which is crucial in the fast-paced world of tech.
It's like they've shifted into overdrive, and they're not letting up anytime soon. But this does raise an important question. Can they keep this up? Can they maintain this momentum?
That's the question everyone wants answered, right?
Yeah.
The AI chip market, it's absolutely on fire right now. You've got giants like NVIDIA betting big on data centers, and you've got a whole bunch of hungry startups all vying for a piece of the action.
Exactly. It's a cutthroat market. To stay ahead, Marvell needs to keep pushing the boundaries of innovation. They need to anticipate what their customers, especially those massive cloud providers, will need years down the road. They've shown they can deliver, but the pressure's on. There's no doubt about that.
And speaking of pressure, let's not forget the reliance on AWS. Right now, it's a dream partnership. It's working beautifully. But what happens if that changes? What if AWS decides to bring more of their chip development in-house?
That's a valid concern. Diversifying their customer base is absolutely crucial for Marvell. It's the classic, don't put all your eggs in one basket scenario, even if it's a really high-tech basket.
They have made some progress in that area, though, right? I mean, their custom silicon is attracting interest from other cloud providers. And their enterprise networking and carrier businesses, those are picking up steam, too.
True. They're not betting everything on one horse. But managing that concentration risk, that's key for their long-term success. And let's not forget the geopolitical landscape. They're walking a tightrope.
You're talking about the U.S.-China tech rivalry, right? Semiconductors are right at the heart of that.
Yeah.
And Marvell's caught in the middle. They've got to keep both governments happy while also safeguarding their own technology.
It's a delicate balancing act for sure. One false step could have some serious consequences. And then there's always that looming threat of disruption. What's cutting edge today could be obsolete tomorrow in this industry.
So Marvell has to stay agile. They've got to keep investing in research and development to stay ahead of the game. Complacency is not an option.
Yeah.
But hey, it's not all doom and gloom, right? Let's talk about the opportunities. I mean, the AI market, it's still in its infancy.
Absolutely. We're just scratching the surface of what AI can do. And Marvell, with their custom chips and optical interconnects, they're perfectly positioned to ride that wave. As AI becomes more embedded in our lives, the demand for their tech is only going to go up.
And their expertise, it spans both hardware and software. That gives them a real advantage. They're not just building chips, they're creating complete solutions.
Right. Plus, they've got a proven track record of delivering on their promises, which is huge. It builds trust with customers and with investors, and that's invaluable in this market. Speaking of value, let's talk about their financials. They're making some serious banking.
Their revenue growth is definitely impressive. But it's that operating leverage that really catches the eye. Their earnings per share are growing at more than twice the rate of their revenue. That tells me their business model is incredibly efficient.
And all that cash flow, it gives them options. They can invest heavily in R&D, they can buy back stock, they could even make some strategic acquisitions. They're in a very strong position to continue growing.
And their enterprise networking and carrier businesses, those are making a comeback too. That tells me they're not just a one-trick pony.
Exactly. Those segments are exceeding expectations. It proves they can compete in multiple markets. So yeah, there are always risks, but Marvell's in a great spot. They're right at the forefront of one of the biggest tech revolutions in history.
And now for our This Is Not Financial Advice segment. Let's get a little crazy here and brainstorm a wild but plausible trade idea based on what we've learned about Marvell. What do you think about this? Marvell partners with a major gaming company to create custom AI chips specifically designed for gaming.
Whoa, now that's an interesting idea. We're talking about chips that could completely revolutionize gaming. We could see ultra-realistic graphics, complex AI-powered characters, immersive worlds that would blow gamers' minds.
Imagine the possibilities. Imagine playing a game where the characters react to your every move in a truly intelligent way. Or imagine exploring vast virtual landscapes that feel almost real. Marvell's expertise in AI and custom silicon combined with the gaming industry's constant drive for innovation. It could be a match made in heaven.
It's definitely a bold idea, but I wouldn't dismiss it outright. Gamers, they're always looking for the next big thing. This kind of partnership could give a gaming company a huge leg up.
Yeah.
And for Marvell. It would open up a whole new market, extending their reach far beyond just data centers.
Of course, this is all hypothetical.
Yeah.
We're not saying this is definitely going to happen, and this is most definitely not financial advice. But hey, it's fun to speculate and imagine the possibilities.
Oh, absolutely. That's what we love to do here at Talk Tickers. We dive into the numbers, we analyze the trends, and we dream up some wild what-if scenarios. Because sometimes the craziest ideas are the ones that end up changing the world.
So we've covered a lot of ground here. The good, the bad, the potentially revolutionary. But there's one more piece of the puzzle we need to talk about: Marvell's leadership.
Right. We can't forget about the upcoming retirement of Marvell's co-founder and executive chairman, Lowy. He's been such a key figure in their success, especially when it comes to the integration of Inphi, which brought in a lot of their expertise in optical technology.
And it's not like he's just walking away. He's actively involved in planning for his successor. That points to a smooth transition, which is definitely reassuring.
For sure. It says a lot about the leadership culture at Marvell. They're not just reacting to change, they're proactively planning for the future.
It always comes back to that long-term vision. And Marvell's CEO, Matt Murphy, he seems to have a very clear vision for the company. He's been leading the charge for 8 years now, guiding them through this remarkable turnaround.
There were some rumors about him potentially leaving for another company, but when asked about it, he basically said, "I'm all in on Marvell." He believes they have the best team, the best technology, and the best opportunity in the industry.
That kind of confidence from the top, it can be really powerful. It sends a clear message to investors, customers, and employees. Marvell's here to stay, and they're playing the long game.
And speaking of playing the long game, they've been making some incredibly strategic investments. They've built this platform that covers everything from data center interconnect and switching to compute, with custom silicon as the crown jewel.
And what really sets them apart is their ability to integrate all of that into a seamless solution. It's not just about having the fastest chip. It's about having the expertise to make all the pieces work together perfectly.
And they're constantly pushing the envelope. They're investing in cutting-edge technologies like silicon photonics and advanced packaging. They're even using the cloud AWS specifically to accelerate their chip design process.
So they're leveraging the technology they're building to build even better technology.
Yeah.
That's pretty meta.
It is. It's all about speed and agility in this industry. And of course, we can't forget about their financial performance. Their revenue growth is outstanding. But what's truly remarkable is their operating leverage.
Yeah, they're making a ton of money. Their earnings per share are growing at more than double the rate of their revenue. That's a clear indication of how efficient their business model is.
And that cash flow gives them so many options. They can invest heavily in research and development, they can buy back stock, they could even acquire other companies. They're in a phenomenal position to keep growing.
So to wrap things up, Marvell is firing on all cylinders. They've got the technology, the strategy, the leadership, and the financial strength to be a major player in the data center market for a long time to come.
They're definitely a company to keep your eye on. We'll be following their progress closely, and we'll keep you updated right here on Talk Tickers.
And that concludes our deep dive into Marvell Technology's Q3 earnings. We hope you found it informative and maybe even a little bit exciting.
As always, thanks for tuning in to Talk Tickers.
And a friendly reminder, this is not financial advice. Do your own research before making any investment decisions.
Until next time, happy investing.